Hola.
Hola.
Muy buenas. Hi, pleased to meet you.
Same here.
So you're expecting me to talk, right? Okay. Does everyone speak in English? Does everyone speak Spanish? Is someone not Spanish speaker, right? Okay.
It's a 50-50, so better English.
Okay, perfect. Okay, well, I make a very brief presentation of who I am, what I do. So you may know what kind of questions I may be able to answer. Okay, I prefer this kind of format in which I can tell you my opinion, at least my opinion, on the kind of things that preoccupates you, that you want to solve. Okay, instead of a class. Okay. So I am Gonzalo Trabacete, CEO and founder of Faraday Ventures Partners. Faraday Ventures Partners is probably the biggest private investors club in Spain with 159 members. We're investing between 100, 200 to 700, about to €1 million per round of financing in startups. In our website, www.faraday.es, you can see our portfolio of invested companies. It's mainly digital, but we are also making some hardware, some lead arbitrage, e-commerce. We are also interested in biotechnology. We are open-minded in that sense. We do not invest in real estate. We do not invest in consulting services or restaurants, for example. Okay, but apart from that, everything that has 2-3 years life, sometimes not even 1 year, and which has an innovation mindset, it can be technological or not. We can study it for investment. Up until now, we have invested 15 companies, around 4 something million euros. And we've been around for the last 4 years, mainly in Spain. We're looking also abroad. On Sunday, I'm traveling to Düsseldorf to see some companies. I was in London last week, 2 weeks ago. So we are quite open-minded in the geography and in sector terms. But we enter a company in early stage, normally just after business angels, just before funds, sometimes with business angels, sometimes with venture capital funds as well. So we've invested with all the main players in Spain: Cavides and Partners, Padinvest, Entrecanales, Vitamina K. I would say most of them. And that's what we do. We are a team of 5 people, 4 investment analysts and a financial controller. And we are closing 4 rounds this month for around 900,000 euros. So that's what we do. Probably what we can help you most, the best knowledge I can give you in this talk is about financing needs and investment policies, strategy of investors that you may be contacting already or contacting in the near future to get some financing for your company. Okay. Okay, so which are your questions?
Can you tell us a bit more about the numbers of your fund? So how many startups applied and how many get selected?
Okay, we are not really a fund. We are a private investors club. There's 159 individuals and companies, mainly individuals. Half of them are entrepreneurs or businessmen, and half of them are people from investment banking, private equity, and strategy consultancy. So therefore, we have not a number of funds. We have an inflow of around 120 projects a month that we receive. I will tell you a bit about the sources of projects. But we offer around 10 projects a year. We offer means that we elaborate a investment opportunity report on the company that we believe is a very interesting investment opportunity for our members. And this report is sent to our 159 members, and they decide which amount they want to invest, each one of them. So typically there's between 10 to 30% of the total members of the club that invest in a particular opportunity, and with different tickets. The average ticket is around 10,000, the minimum ticket is 2,000, and the maximum ticket is 200,000 per member per round. Okay. On the type of sources of inflow of projects, we differentiate four main by inverse relationship between quality and quantity. I would say is the best source of projects normally are because of our previous investments, our co-investors in previous rounds, which are going to invest, say, 500,000 in a particular round in a particular company, and the round is of 1 million euros. They don't want to cover the full, or they can't cover the full 1 million euros, and they want some previous friends to cover it with them. And since we are quite active in the board of advisory board or board of directors, and trying to help some of the companies in the initial stages at least, they invite us quite regularly to complete the financial rounds they are investing in. So that's a very qualified source, because it's people that normally are also dedicated like us full time to analyze investment opportunities, that are taking the risk, that have already done the analysis, that appreciate us as companions. So normally it's a very the average quality from this kind of sources is very high. It doesn't mean that we invest in all of them, no, not at all, but there's a few. Okay. The second better quality and a bit bigger number of opportunities received come from our members network, because I told you half of them are entrepreneurs, not all digital. There's real estate entrepreneurs, there's dentists, there's everything. There's also cloud computing, e-commerce, etc. But entrepreneurs normally that have 10, 20 track record in their company, 10, 20 years track record in their company. So obviously their companies went well and are going well, and they have some excess liquidity that they want to invest. And the other ones come from a strategic consultancy, private equity, etc. So therefore, our own members receive quite a bit of investment opportunities. Some of them also act as business angels before any revenues in the companies they invest, and therefore provide us with further investment opportunities on their own portfolio or on companies that they are looking to invest themselves, to complement their analysis and to see what is our opinion on this company. So because they know us well and because they have aligned interest, it's also a very nice source of deal flow. The third bigger quantity, a bit lower average quality, but it's an average. At the end of the day, we are trying to invest in outliers. Okay, so we do not base our investment decisions on the source of the investment opportunity. So therefore, I would explain to you at the end. But third source would be business angel networks with people dedicated to manage them, not accelerators, incubators that have some track and that are doing that for the last 2 years at least, and like, for example, Bolt. Well, I would say these two. Basically, it's not investors, but it's hubs where entrepreneurs meet, that we know that they are going to be needing some financial input, some investment in the near term, and these are normally business angel networks. I'm talking about IS, ESADE, Keiretsu. Well, there's different ones, but these are the most active three probably in Spain. And also accelerator. I'm talking about Urban, Waira, Connector, whichever. And the difference between the fourth line is that this third line has people that are professionals who are dedicated to this. It's not about investing, but it's about mentorship, about helping finding investors, about many other things that are relevant to the companies. Obviously, they know each year better how to present the companies, what we look for, what the companies look for, etc. So they have people dedicated to it. The fourth one, and then you have a huge amount of opportunities. The average quality is lower, but still we have already invested in 2 or 3 companies that we have found in these channels. Is project contests that are organized by sometimes public administrations or big corporates as innovation hub for them, or sometimes just like a marketing campaign. I've seen RAM brands organizing innovation contests, okay, and crowdfunding platforms as well. Universities, business schools. There's also like things like Spain Startup, Finovista, Google, that from time to time they organize contests, but they do not have people that are professionally qualified and dedicated to recurrently offering investment opportunities. So therefore, sometimes they're not looking for funds, sometimes yes, etc. And there we have a huge amount of projects received each month. So these are our 4 main deal flow entry points.
Thanks. And how do you invest? Do you invest directly in exchange of equity, or do you?
We always ask for equity.
Okay.
We sometimes may invest in a convertible format, but at the end of the day, we invest in quite risky companies. At the moment we enter, they are losing money. They are normally growing, but still in their plans, 1 or 2 years of losses, and very, very ambitious plans. So we want the upside. We know what is the risk. The risk is failure, and we assume the risk. So with a debt format, you are assuming the risk, because at the end of the day, if the company goes bust, they won't be able to give you back the debt either. But we do not want a 5 or 10% interest on the upside, because we know some of the companies that, or maybe most of the companies that we are going to invest are going to go bust. Therefore, we need a really high profitability on the ones that go well. So the way to that is to invest through the equity, because the equity has the potential of revaluation if the company goes well, that the debt doesn't. And really the protection that the equity doesn't have but the debt has is really not relevant in a startup mood, because if you go bust, you go bust, and we are not asking for personal guarantees or whatever. So.
Okay. I have another one. Gonzalo, what are the entry criteria for you to judge a startup? Because you have what are the entry criteria for you to judge a startup? Is it maybe like the ambitions of the project, the fact that you like it, or you ask for specific metrics in order to?
Yeah, I mean, it depends from the business model and many other things, but we ask for first revenues. We need to be able to check first revenues. Okay, sometimes we've invested with the first couple of months of revenues. Sometimes we've invested with 3 years of revenues. Okay, but we need to see the revenues, and it depends on the business model, in the sense, oh, my first month is 30,000 euros in revenue with a 50% margin. Well, that's really great. But if it's your dad who has both the service, because of his consultancy firm has both you the product, well, it doesn't matter, this sale for us. If your first month is 500 euros, but the thing is that you've been operating for 10 days in that month, and in these 10 days there's been 1,000 people that has bought for 50 cents a month your service, and you're growing incredibly rapidly on the user base, it's fantastic. So one has 30,000, the other one has 500, but the 500 is much more valuable for our analysis, in the sense of the possible evolution of the company than the other 30,000, because it's just one sale to a really related party.
Definitely.
Okay, so we ask for first revenues. We ask for at least 150,000 euros of investment size. Okay, if you are asking for 50,000, we cannot offer that to our members because there's too many members. Okay, we ask for common sense in valuation, with ambition, with things that you've done up until now. If you are a PowerPoint, you haven't constituted the company, and you believe you have no patents, and you believe you need 2 million euros at 10 million per money valuation, we may believe you're crazy, you know, and reason enough for not continuing the conversation. And in the same way, in the other side, you are having 50 to 100,000 revenues, good margins, good growth, and you're asking for 37,829 euros at a 500 per money valuation, 500,000. Say, well, this guy has no negotiation, you know. I believe it's not about price, it's about information. When you're asking for money in an equity format in your company, you're basically, we conceive it as you're letting people live at least some days a month in your house. You should know the price of the rent. You should know the kind of people you're letting in. You should make some due diligence on your side before proposing an investment opportunity. And if you haven't done it, well, on the cheap or on the expensive side, on the valuation, on the conditions, on the other people that you've visited or that you believe that maybe interested in your company, on the financial projections and the cash you may need, etc. Well, you will probably have a very fairly similar attitude when you are negotiating with your human resources, when you are negotiating with your clients or suppliers, and therefore we believe an informed party is normally an informed party on every side of the business. So if it doesn't make sense on evaluation or another scale, we may not enter. We like big pain. We like a company that solves a problem that is relevant. So it depends on the kind of company you're doing, but we like a company that has has a customer that is well identified and that it solves a relevant problem for that customer. Sorry. And we like teams, obviously, that have the right mix of skills and the right academic and professional experience, the right attitude, but also the right compromise. I mean, there's things that we don't like about some people-based analysis is, okay, I have money, I have family that can put some money, I have everything, but we've just put 3,000 euros in the company, and we're not going to put any euro in the company because that's the job of the investors. We like people that have, bet on their company at the beginning for them to be able to support high evaluations further on. We like people, for example, things that we don't like either. No, I will leave my company job, at Accenture, for example, only on the day I will get the investment for the company, and I will get a salary at least equivalent to what I was getting at Accenture. It happens, and well, it's not really compromise in that sense, things like that. It's just common sense. If you see a guy that really believes in his project, that believes he can do something for his customers, that has convinced already some part of his ex-employers or family or whatever to put the first thousands euros in, etc. Well, it's a guy that has a big compromise, personal and professional, with his company. We like that.
Okay. And just last one.
No.
Normally, what's the length of the evaluation cycle for you? Is between the 3 to 6 months, or?
It depends very much, because what happens in most of the investment opportunities we receive is that they are probably too early for us to invest, because they're asking for too little money, because they are planning to launch their commercial activity in 3 to 6 months. So it's happened that we've invested in a month and a half after receiving the investment opportunity. It's happened that we have been advising the entrepreneurial team for 9 months without investing on what to do, limited advice, and follow them up till their launch and investing 2 months after their launch. So that was for 11 months in total. So, and it's very often that we say, okay, we cannot enter in this particular round because we have some other rounds that are closing at the moment, and we believe there are better investment opportunity at this point in time, but we will be very interested to get into the next round if there's space, and it has happened as well.
Okay, thanks.
More questions, please.
I wanted to ask, maybe you mentioned that I wasn't so clear about this one. How can we show you our projects? How can we submit to your club of investors?
You can send us an email. I'm putting my email here, or email, because
We see.
yeah, you got info@faraday.es.
Okay.
We receive it and we put it to the analyst that has more time to be able to provide quick feedback, etc. And then we start the analysis, the study. But at the end of the day, we provide around 10 investment opportunities a year to our investors on more than 1,000 received opportunity.
Oh, sure.
So
for this 2015, we probably are over with your investments.
We are taking in investments to analyze, but to be investing from the end of January onwards.
Okay, thank you so much.
Okay.
No more questions?
Some more questions? If not, I'll start asking questions.
Then just because I'm curious, so what is your the deal that you like the most and the one that you like the least?
The deals in general, or on the ones that we have done?
No, the specific ones that you personally that you like the most and the one that you like the least.
From the ones that we have done. Yeah. Well, the thing is that I like the most the company that are doing very well.
Oh, well.
That's the thing. It's not a part of the deal. You know, when you enter a deal, you really never know which one is going to be, because you made all your analysis and you see a compromised team, brilliant team. You know, you can be a very, very good team and still, you know, it was not the right timing, or you didn't have enough access to capital resources or human resources, and it just can't work. But at the end of the day, the deal is good if the future, you know, happens to be good, not looks good. It always looks good when you enter, because you have the good team, you think you have the right product, the right market, etc. But you never know until 3-4 year passes. So the deals that we've done that are doing very good, the thing is that we cannot really tell from the deals that we've been closing in the last year, because they need 2-3 years time maturation. But Abitissimo first investment, it's an amazing company. It's doing really, really good. It's on the edge of 8 million revenue this year, and we're very happy with the evolution. People that are wanted to sell, they can sell 8 times their amount invested 3 years ago. And it's a very nice profitability for the investors. And I was with the CEO yesterday, and he's such a nice guy, organized mindset, and it's 117 people in their company now. And it's doing very good, and it's really the leader in its market in Southern Europe and Latin America. PlaySpace is doing very good. Boca is doing amazingly good as well, and Reclamador is amazingly good. The thing is that these were four of the first. Yeah, we like them obviously because they're doing very nice job in leading their companies and in creating value in the company. Therefore, for us as well, for the shareholders. So, but we also like them because it's very organized, very elegant in the treatment with stakeholders. I mean, employees, investors, clients, everything. It's people that have a very elegant way of addressing problems or addressing issues. Of communicating successes, and we love that. What we don't like, and we have one example really of it, one and a half, I would say, is CEOs or leaders of the entrepreneur that I cannot say names, obviously, but that when things go not that well or really bad as what was expected, start to have bad relationships. I mean, we assume that not in every project is going to be good, but they start to have bad relationship with their investors in particular, and this can happen because of the pressure that as a CEO you perceive when things are not doing good. And when things are not doing good, you may not have the back of your investors, not the full back you will be liking to have. Back, I mean, I need 500,000. Well, listen, but we are not, our investors are putting 50. And we can try to help you taking some other people. Well, you are not backing us and it's not fair. Well, a fair world, everyone is free to decide what they want to do with their money. So you shouldn't have this kind of attitude, and but you cannot see that on the first entry deal. You see that when problems arrive. As an investor, you normally enter in a company when the company you believe is doing good, is growing and stuff, and great. It's a sweet moment for the company when the first entry of professional capital enters. We know in many occasions you're going to have big difficulties. I've had them. I'm also an entrepreneur. Faraday is my startup, and many of our invested companies have them. Most of them, I would say. There's people who treat them with resiliency and elegance. There's people who fall under the pressure and start to, and we see that, and it's not about investors. We see that in the rotation of the team. The CTO is fired. And that's the bad situation. That's one of the less enjoyable parts of our job, but most important as well, because you need to be able to manage that. You still have to report to our clients that are investors in that company, and you're trying to protect their investment. So, and you cannot change a CEO.
Of course.
Can't.
Thanks.
One question? No.
No. One question from my side. You are all CEOs of startups?
Yes.
And you will all be looking for funding in the next 3 to 9 months?
Ours as well.
Okay. Most of luck. We're open to your opportunities and glad to analyze them. And what could I say? Well, thing for you to, my perspective is if you can finance yourself with your clients, is the best ever possible way of financing your company. If you have a model that allows you to start having minimal revenues to support the human resources and marketing of the team as soon as possible. If you can avoid debt or equity, the best thing is always, and with creative thinking, you may be thinking of ways that you can start financing the company with your clients. The second preferred option will probably always be non-guaranteed debt, like ENISA, like, I'm sure Bolt will know everything about this kind of providers of non-diluting financials, which is debt, normally with public administrations. ENISA in particular is one very, they give a lot. And if you are able to avoid investors, I would. It sounds strange for me to say that. It's not that we are bad, we are not bad, but again, it's someone that is going to be at your home, and you need to be able to share your home. And it's someone, it depends on the structure. There's business angels, there's family offices, there's clubs like us, and there's venture capital funds. But if you want investors, that's for a particular reason, and you need to be able to grow quicker, and you have to be aligned with the investors, in the sense that most of the investors, is not really our case, but it can happen. Most of the investors will be asking you a return on their investment. That's normal. And this return, in particular for VC funds, will normally come as an exit opportunity, which means that you may be thinking that you have to sell your company at a given point in time. So that's the main profitability option for VC funds. So if you don't want to sell your company, you probably don't want a VC fund in. And you need to make sure that that your interests are aligned with your stakeholders, with your investors. That's normal, but also with your customers and your your team. But don't let a fund in if you are not prepared. For example, there's an entrepreneur the other day. Listen, I'm not taking in any money from VC funds because I believe the most interesting line of business I can put in my company will only be possible to put it in 6 to 8 years time, because it will be a big data based service, and for that I need to be selling many of these other gadgets in the next 6 to 8 years before having a user base that allows me to exploit the big data model. But a VC fund will be needing, because a VC fund has a limited time frame. They need to give back return to their investors, okay? And normally it's maximum 10 years. So they need to be selling the companies they have in the portfolio within a limited time frame. So that's one of the things that you should be thinking about before letting in any investors, VC funds or others. We don't have that problem in particular at Faraday, but we may have others. So just ask directly, frank question to the investor. How do they plan to get their money back, their profit, and make sure that this way is aligned with your perspective and your company vision. Okay.
Thanks.
Thanks so much. Thank you.
Thank you very much, and lots of luck for all of you. It's not easy, but many people say, no, it's very hard, it's very hard. I believe it's far harder to be working at a company you don't like from 9 to 7, and not enjoying your work and not enjoying the people you're working with. That's far harder. So enjoy, work hard, but enjoy it. I'm enjoying every day of Faraday. So good luck.
Thanks.
Okay.
No,